So you finally stack up $500,000 in net worth. Half a freaking $1,000,000. Sounds like a flex, right? Until you realize that ain't even rich anymore. Because while you're out here feeling like Tony Stark, the average home in America is now $430,000. A used car's pushing $28,000. And eggs are basically the new crypto. You hit $500,000 and still can't afford to breathe in California without a cosigner. That's when it hits you. $500K today isn't rich. It's the entry ticket to not being broke. Welcome to the game, my friend. You made it past the tutorial. Now the real boss fight begins. But before we go any further, hey, I'm Peter, your friendly neighborhood finance troublemaker, and welcome to Peter Finance, where we roast bad money habits, break down the real numbers, and slap the truth out of your wallet until it learns some discipline. Yeah, I'm not your average finance guru. I don't sell courses, I don't preach minimalism while driving a Lambo, and I definitely don't tell you to just skip your morning coffee. Bro, if your whole financial plan depends on caffeine deprivation, you're already broke in spirit. So if you like money talk that's real, a little reckless, and backed by math, go ahead, smash that like button like it owes you rent, subscribe so you don't miss the next upload, and let's get into what really happens when your net worth hits that $500,000 mark. All right, now let's set the scene. You're grinding. You've been investing for years, cutting out stupid spending, maybe got a few wins in the market, a side hustle that finally took off. One day you log into your net worth tracker, boom, total assets minus debts equals $500,000. You sit there staring at the number like, damn, I did it. Then 2 minutes later, your phone buzzes. It's your buddy, credit card Carl, asking if you can split the dinner bill because he forgot his wallet. Suddenly, that $500,000 doesn't feel so legendary. Let's break down why. See, the average American household net worth, according to the Federal Reserve's 2022 survey of consumer finances, is about $192,900. So if you've hit $500K, congratulations, you're officially above average. You're in the top 30% of households. But here's the thing. Being above average in today's economy doesn't mean you're rich, it just means you're not drowning yet. Because inflation has been punching your money in the face. The US dollar lost about 17% of its purchasing power between 2020 and 2024. That means your $500,000 today buys what $415,000 did a few years ago. So $500,000 ain't what it used to be. It's like hitting level 50 in a video game. Cool, but the enemies got stronger too. Now let's talk about what that $500K actually means in real life. Say you've got $300K in investments, index funds, 401K, etc. $150K in home equity, $50K in savings or cash. That's a nice setup. But let's say you're 35 years old. You've got kids, a mortgage, maybe still paying student loans. According to the Bureau of Labor Statistics, the average household spending is about $72,000 a year, or $6,000 a month. If you stopped working today and lived off your $500K, that's roughly 8 years before you're broke. And that's without inflation, taxes, or life deciding to uppercut you with medical bills, car repairs, or your cousin Crypto Kevin asking for a short-term loan. So yeah, $500K sounds big until you realize it's just the beginning. But don't get me wrong, hitting $500K is no joke. It's a massive milestone. It means you've built discipline, made smart moves, and escaped the paycheck-to-paycheck hamster wheel that most people never get off. The sad truth? According to Bankrate, 56% of Americans can't even cover a $1,000 emergency without borrowing money. Meanwhile, you've got $500,000 working for you. You're doing something right. But what actually changes when you cross that line? How does your mindset shift? How should your money work for you differently? And what traps do half-millionaires fall into that keep them stuck just before the big leagues? Let's dig into that next, because this is where the fun and the math begins. All right, so you've hit your first $500,000. Congrats again, baller. Now let's get real about what that number actually does for you. Because let's be honest, most people who hit $500,000 think they're on easy street. But $500,000 ain't the finish line. It's the launch pad. If you play it wrong, you'll be back to broke faster than a Karen demanding to speak to the manager at Starbucks. So let's crunch some numbers. The Peter Finance way. Real talk, no fluff. Say your 500K is invested in a mix of index funds, ETFs, maybe a little real estate. Nothing crazy. Let's assume you're getting an average 7% annual return, which is historically what the S&P 500 has done after inflation. 7% on 500K is $35,000 a year. That's $2,916 a month in passive income if you never touch your principal. Now, before you throw your job badge in the trash and yell, "I'm financially free, baby," slow down, genius. Because unless you live in a cabin, grow your own vegetables, and eat air sandwiches for dinner, $2,900 a month ain't freedom. That's comfortable if you live modestly, not private jet money. But that's the beauty of it. You've got options now. You're no longer trapped in the paycheck-to-paycheck circus. You can take risks, switch careers, start that business you've been daydreaming about, or finally tell your toxic boss to go have an intimate moment with the printer. Let's break it down with simple math. If you keep that 500K invested and just add $1,500 a month at the same 7% return, in 10 years, you'll have around $1.14 million. That's millionaire territory. And that's without winning the lottery, scamming anyone, or selling your organs on the dark web. It's literally just math, consistency, and time. But here's where most people fumble the bag. Lifestyle inflation. See, the second most dangerous thing after hitting 500K is thinking you're set. You start upgrading everything. You go from a Toyota to a Tesla, from an apartment to a forever home, from regular gym membership to I only do Pilates with a view. Before you know it, your expenses have leveled up to match your income, and you're right back to square one. This is what I call the $500,000 hamster wheel. You're rich enough to look rich, but not rich enough to stay that way. The rich don't flex, they compound. Let's look at this visually. Imagine you're sitting on your 500K portfolio. If it grows by 7% yearly, you make $35,000. Now let's say you get greedy, cash out $50K for a car because I deserve it. Cool, but next year you've only got $450K working for you, and instead of $35,000, you earn $31,500 in returns. You just killed $3,500 of free money every year for life because you wanted heated seats. That's what separates the wealthy thinkers from the wannabe flexers. The wealthy treat their money like an employee. They don't touch the worker, they live off the overtime. Now let's talk about net worth composition. Most people at the 500K mark have their wealth split between 60% investments, retirement accounts, brokerage, 30% real estate, home equity, 10% cash or other assets. That's good, but it's also fragile because your home equity isn't a piggy bank. You can't sell your garage door to pay bills. True financial stability comes when your cash-flowing assets, not just your net worth, can cover your lifestyle. In other words, your passive income greater than your monthly expenses equals you're free. And that's what most 500K earners miss. They focus on how big the number looks, not what it does. Now let's make this even more real. Say you've got 500K and your living expenses are $4,000 a month. That's $48K a year. To be financially independent by the 4% rule, you'd need $48,000 divided by 0.04 equals 1.2 million. So your 500K, it's 42% of your freedom fund. You're halfway to retirement level freedom. But the jump from 500K to 1 million isn't just about money, it's about momentum. Because that's when your money starts working harder than you do. Once you cross 500K, compounding starts to feel real. Your returns are no longer 1,000 here or there, they're 5 figures. 500K at 10% growth is $50,000. You just earned the median US salary without lifting a finger. At that point, the game changes from how do I make money to how do I not lose it? And trust me, the universe has a way of testing your patience right after you level up. Your car will break down, your cousin will pitch a sure-win crypto idea, and your brain will start whispering, you deserve to enjoy it. That's how the 500K curse gets you. The goal isn't to spend like you're rich, it's to invest like you plan to stay rich. Because the only thing more painful than being broke is tasting wealth than losing it. So yeah, $500,000 isn't rich. It's momentum. It's proof that your money has muscles now. But what's next? How do you go from the half a mil club to the seven-figure circle without losing your sanity or selling your soul to hustle culture? That's what we're diving into next. All right, so you've got your half a mil sitting pretty. You've beaten the broke system, dodged lifestyle inflation, and your portfolio's compounding like a little loyal worker bee. Now, here's the real test. Your mindset. Because the second you hit 500K, your brain starts acting funny.
You stop thinking like a grinder and start thinking like a winner, which sounds great until you realize the winner brain can get lazy real quick. See, when you were broke, you were hungry. You read every book, watched every finance video, made budgets tighter than TSA security. But once you cross 500K, you start thinking you've made it. That's when your subconscious whispers, relax, you're doing fine. Next thing you know, you're eating out 4 times a week, upgrading your phone, and rationalizing every little purchase as a reward. Congratulations, you've just met your new enemy, complacent Carl. Carl's not broke, but he's not growing either. He's that guy sitting on his 401k, bragging about his net worth at parties, while inflation quietly mugging him in the background. Half a mil doesn't give you permission to relax. It gives you responsibility. Because now you're not just managing income, you're managing assets. That means risk, taxes, market volatility, and a little monster called FOMO. Let's talk about that. When you hit 500K, every new investment opportunity starts looking like the next big thing. You'll get calls from friends saying, yo, bro, you got to get in on this Airbnb thing, or this new crypto project is going to 10x by next month. And suddenly you're tempted to play venture capitalist when you should be playing wealth preserver. This is how people lose fortunes, not by being broke, but by chasing more. Let me tell you a stat that should slap you awake. According to the Federal Reserve, about 40% of U.S. households with over 500K net worth eventually lose a significant portion of it within 10 years, usually due to bad investments or overspending. Not market crashes, not recessions, just dumb decisions dressed up as opportunities. You know why? Because once you get money, your ego gets loud. It starts saying things like, I'm smarter now. I deserve this. I know what I'm doing. Nah, bro, you just got lucky and disciplined. Don't confuse that with genius. The best investors, the real millionaires, are boring. They automate their investments, avoid hype, and let time do the heavy lifting. Here's something to think. While everyone's chasing the next shiny object, they're quietly buying index funds and reinvesting dividends. While everyone's showing off new cars, they're showing off compound interest graphs. That's the millionaire mindset. Delayed dopamine, consistent action. But there's another mental trap people fall into when they hit this level. Comparison. You start comparing yourself to people with more. You're worth 500K, but your friend Chad just sold his startup for $3 million. You start feeling behind. Let me make something clear. Comparison is a wealth killer because you'll always find someone richer. Even billionaires compare themselves. You think Bezos doesn't check what Musk is doing? You can't play someone else's game. Your financial journey is like a video game save file. Your progress, your level, your boss battles. Focus on what you can control. Your savings rate, your asset allocation, your income growth, your spending discipline. The rest? Background noise. Here's another thing that changes when you hit half a mil. People start treating you differently. Suddenly, you're the responsible one, the money guy. Family members might start asking for small favors. Friends might get weirdly competitive. You'll notice it. The energy shifts. That's why you need financial boundaries. You're not a walking ATM. You're a strategist building a legacy. If someone's mad you won't fund their new t-shirt brand called Grind Gods, that's not your problem. The wealthier you get, the more you have to say no. Because saying yes to everything is how people go from rich to, remember when I used to have money? Now let's talk about systems, because systems save you from stupidity. Once you hit 500K, your goal isn't to manage more, it's to manage smarter. Here's the cheat code most people don't use. Automate everything. Auto invest into your brokerage every month. Auto pay your bills.
Auto transfer savings into emergency and opportunity funds. Auto track your net worth once a quarter, not daily, so you don't freak out over market dips. You shouldn't be reacting to your money anymore. It should move like clockwork. And that brings us to the mental evolution, the half mil to millionaire transition. At 500K, you've proven you can earn and save. At 1M, you prove you can build systems that keep your wealth growing while you live your life. You stop thinking like a hustler. You start thinking like a capital allocator. That's the quiet switch nobody talks about. At 500K, your time is still tight to money. At 1M, your money starts freeing your time. You stop asking, how do I make more? And start asking, how do I protect and multiply what I already have? That shift right there is where generational wealth begins. Because it's not about being a genius investor. It's about being consistent enough to let time work its magic while everyone else chases hype. So yeah, hitting 500K changes how people see you. But more importantly, it should change how you see money. It's no longer something you chase. It's something you command. And the better you command it, the closer you get to the one milestone that changes everything. True financial freedom. That's what we'll break down next. How to go from wealthy on paper to financially untouchable. So here's the real question, champ. What happens after the half mil glow wears off? You get back to work. Because wealth isn't a destination. It's maintenance. That 500K, it's your foundation. Now you build on top of it. Stronger, smarter, faster. This is where you start diversifying. You don't just hold index funds. You start exploring cash flowing assets, dividend stocks, REITs, maybe rental properties, or even small business equity. Each dollar you own now has a mission. Earn more dollars. You're not chasing shiny objects. You're building systems that print money while you sleep. You're starting to think about tax efficiency because the richer you get, the more Uncle Sam wants a piece. You look at Roth conversions, tax loss harvesting, and smart asset placement. This is the part of the game where most people zone out, but not you, because you didn't just come to flex, you came to win. Now here's something I'll say straight up. If you've made it this far in the video, you're not average. Most people clicked off when they heard compound interest, but you stayed and that says something. So do yourself a favor, download this video. Seriously, because I guarantee you a year from now, when you're further ahead, you'll come back and catch new gems you missed the first time. And when you do, you'll realize this wasn't just a money talk, it was a roadmap. $500,000 is the point where money stops being survival and starts being strategy. It's the checkpoint that separates the dreamers from the doers. So keep stacking, keep compounding, and keep that energy focused. Because the next milestone isn't just about money, it's about mastery. And trust me, when you hit your first million, it won't even feel like luck. It'll feel like math finally paying respect to your discipline. I'm Peter, this is Peter Finance. And remember, don't just chase the bag, learn how to make it chase you back. Catch you on the next one.